So much headline risk in this market, so much volatility. If you're an investor, even a long-term investor, how should you view this volatility and all this headline risk, and should you respond to it? And if so, how?
Yeah, well, as you know, Frank, last week we started saying you can't have a failure of imagination about what could happen in terms of Trump policy, both to the upside, but of course also to the downside. And we started talking about hedging equity exposure going forward into this April 2nd announcement on reciprocal tariffs. And I think, some of these risks have played out this week. And are likely to continue. And, I mean, this is not, I'm not trying to make political statements or statements about how I think the world should be organized. I'm trying to make these statements on the back of data. And, things like Texas is Trump country. But if you look at the beige book out of the Fed, the Dallas Fed is saying that, hey, this uncertainty is starting to weigh on businesses and potentially on growth and investment. And that's one of the signs that we're hearing from businesses, and we also hear them from clients. And then, of course, the market is telling us this week that the Trump administration lost the growth narrative to Germany, which hasn't happened in a long time. So we need to see how this plays out, but we expect further volatility ahead.
Carl, I'm going to come over to you. According to your notes, you believe if these 25% tariffs do actually get enacted, as was previously announced, could cause a recession. But we continue to see these pauses, exemptions, and kind of carved outs. Does that change your view of the impact on tariffs on the U.S. economy?
Well, right now, it's not the actual tariffs themselves that are affecting the economy, but it's the fear of the tariffs. And as the other guest just pointed out, this uncertainty appears everywhere. I think if you did a search, you'd find the word uncertainty appearing more than ever before. It appears in the NFIB survey of small businesses, where they talk about uncertainty rising. Since the election in November, when they became very certain, they've become increasingly less certain about their outlook for the economy. Is this a good time to invest? No, not really. Is it a good time to expand your business? Maybe not so much. And we see it in consumer sentiment, that consumers are feeling, well, they don't know what's going on. And if they feel uncertain, then consumers won't spend as much. And consumption spending has been what's driving the economy. So we're looking right now at kind of the fear of tariffs and the uncertainty of everything that's happening in Washington, weighing down on economic activity. And the bottom line on that is that GDP now, the Atlanta Fed's spot forecast of what's going on in the economy, is looking for a 2.3% contraction in GDP for the first quarter, the first time ever, other than COVID, that GDP now has pointed down.
All right, so you're saying it's largely sentiment, but a lot of people say that the fundamentals of the market, Carl, the economy, are still very strong. So in your mind, you're saying no, they're not?
It's more than sentiment. You look at consumer spending, that's down in real terms. You look at retail sales, they're down in real terms. You look at durable goods, and other than airplanes, they're down in real terms. We're seeing real indicators of economic activity actually pulling back right now, just on the basis of sentiment. And again, just listening to your market wrap a few minutes ago, financial markets are feeling the same thing, and that's real also. The loss of wealth in stocks also affects consumer spending, and consumers are the only thing that have driven the economy over the last 2.5 years.
Carl, we're going to take a break in a second, but I do want to point out one thing. We've heard from MasterCard earlier this week here on this show, and also their chief economist was on a different show yesterday saying, yes, we are seeing a slowdown when it comes to spending of goods. However, consumers continue to spend on services and travel and things like that. While the data you're pointing out to, of course it's accurate. I agree with you. Obviously, we're seeing declines in retail sales. But isn't that just a part of a shift in spending as people go to other parts of the economy and look to spend their money?
Well, you can stick your head in the sand and say you don't trust the data, but the consumer's expenditures data in volume terms cover everything, all right? Services, goods, everything. So maybe there's a change in the mix, and maybe that's important too, but the macroeconomic aggregates are pointed downward right now, and that's what GDP now tells us. It's not a question of mix, it's a question of overall activity, and it's not looking good after seeing the January data. Now, we'll get payrolls later this morning.
Carl, hold off 1 second. We're going to get to that part in a second. Both of you, Mark, stay there as well. We're going to continue this conversation in just a moment.